Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside. Look at that, Carol Massar. We're counting you down to the closing bell live from the Milken Institute Global Conference in Beverly Hills, California. Our global simulcast, not quite a simulcast. We're doing it in person, Carol.
I know.
Who says I didn't like it?
Not me, not me.
I think it's interesting the market moves today. I mean, Scarlett and Katie were talking about it. Not much going on in the equity market, but you saw that 13, 14 basis point jump on that 2-year yield back over 4.1%. 2 days before we get that next big Fed decision.
Well, I think it's interesting. I think, we got the bank deal, you got JP Morgan, First Republic out of the way. If you look at the trade, it very much is, to some extent, starting to mark time until we get to that Fed meeting. And it's interesting, that we're looking at maybe the expectations. We know that the Fed's going to continue to raise rates. I was just having some conversations about this whole concept of, and this was from, I think, Sarah Malik over at CI at Nuveen, this idea that people think there are going to be rate cuts later this year. She's like, I don't think so. I think it's going to persistently keep at a higher level.
And we've heard that from a couple other people, and the idea of how they adjust to that, right? Because when we talk about the Fed raising rates, at least for the group in this room, it all comes down to their cost of capital to do that next deal, and then the hurdle rates that they have to give to investors in that higher rate environment.
Exactly. Whether or not they're going to take on the risk for a deal that they're uncertain about at a higher cost of capital, it's unlikely to happen. And you got to think about that in terms of economic momentum.
Everyone wants to hear from the Fed. It's not just really about that rate decision, right, Carol? It is how they, if they commentate on what happened with First Republic as well as the other banks and how that factors in. All right, we are getting the closing bells in New York. Carol Massar and Romaine Bostick on the ground at the Beverly Hilton in Beverly Hills, California for the Milken Institute Global Conference. Let's toss it back to Scarlett Fu in New York with the roundup of the close.
All right, there you have it, the closing bell ringing, and you have red arrows across the board here for the Dow, the S&P, and the NASDAQ. The Dow losing 0.1% right now, 34,050. The S&P 500 losing ground, 0.1% as well at 4167. The NASDAQ also down by the same amount at 12,212. We should mention that the Russell 2000 also little change. So across the board, little movement for the major indexes, but plenty of movements among individual stocks. Let's go to the sector performances here for the S&P 500. This is the level 2, which looks at 24 industry groups, and you have chip companies in the lead here, along with transportation companies, each of them gaining about 1.5% at the moment. On the flip side, retail is off by 1.9%. Energy stocks also lower by 1.3%. Also following oil prices down as well. Oil prices getting a hit here after China PMI data. Renewed concern about a bumpy recovery in China and perhaps unsustainable demand from China for the world's oil. So that's a look at what's going on in markets. Not a whole lot going on here, Romaine, when you look at the major indexes, because it's really all about what happened with the big banks and JP Morgan absorbing First Republic, and of course the lead up to the FOMC meeting that begins tomorrow and concludes with a decision on Wednesday.
Yeah, I mean, we're talking about, thank you, Scarlett, we're talking about, of course, a Fed that's already done 9 rate hikes, Carol Massar. Most people expect the 10th one coming on Wednesday here. And we talk about that long and variable lag of these Fed hikes and what the impact will be. And maybe that was what we saw with the banking crisis, SVB, Signature Bank, First Republic, et cetera. Maybe that is the lag that we were waiting for.
Absolutely, and I would argue that the lag isn't over. And I think there are folks that are saying here at Milken that, it's going to be, whether it's 6 months more, 12 months more, in terms of feeling the full impact of the Fed rate increases. Fed isn't done yet. And so in terms of some of the stresses that we'll see within the system, whether it's on bankings or other parts of our economy, one individual saying there's going to be a lot more corporate bankruptcies, that we're going to see that going forward. So I don't think we're quite done yet in terms of some of the stresses.
Absolutely, particularly because even if you get to the idea of the Fed pausing, we have some folks who do think this is going to be one and done on Wednesday. But, and you said it before, how many people are you talking to that actually materially believe that there's actually going to be rate cuts in 2023?
No, I think I think that's
with 5%.
Exactly. I think that is starting to go away, despite what maybe the market is indicating. And I am curious to see what the Fed ultimately focuses on. I don't feel like there's a ton of people talking about Fed speak or so on and so forth. They're finding opportunities in this environment. They're, able to kind of continue on with business, but it'll be interesting to see what the Fed says, what they decide to focus on.
And they have to. I mean, that's their job, and that's what they do. But the thing I've been curious about, and I've been asking them all about, is sort of the difference in valuation and pricing in public markets versus what we're seeing in private markets. There's a gap there.
Absolutely.
And no one seems to either know or want to articulate what that gap is.
No, and it's interesting. I feel like that's a continuation of the conversation we had last year. The private markets, I mean, many would argue too that when you have bank stresses and traditional banks start to pull back, that's where people go for funding. But I would say that they're also getting picky and being very careful as well.
Is that a healthy market? I mean, to have those, I know everyone in this room says, oh yeah, we'll do it, but is that what you really need? Is that what you really want?
I don't know. I don't know. It's really hard when you call something shadow banking. Like the connotation
they're out of
it.
the shadows, Carol.
They're out of the shadows.
Yeah.
Exactly. And many would say that this is part of our financial system. I don't know.
It is. And then the flip side of that is when you see JP Morgan come in, take on the First Republic business here, and the idea that a bank that was already a behemoth is now going to be more of a behemoth with the blessing of regulators. Now the question becomes, what is their role in our economy? We've gone past too big to fail.
Yeah, absolutely. This is kind of interesting. And at some point, regulators are going to have to look at some of these banks. And what does it mean for consumers ultimately? Do they have equal access? We know they don't, right? They didn't beforehand, and even more so in this case.
And we're still waiting to hear, I guess, get a little bit more of the lay of the land as to how regulators adapt to us. I know that we had a great story with the FDIC talking about this idea in their report of how you sort of rethink the deposit insurance system. Maybe you create sort of a tiered system that sort of gives a higher level for businesses versus individuals.
I want to ask you, because you talked with Mike Milken.
I did.
And I know he's very much on healthcare. He's got a new book out. He's talking about it. I didn't get to hear the interview. Did he talk about this environment? I'm curious. In terms of the financial sector.
He did. He talked about just how much everything has changed. He seems to think that all of the competition out there, the fact that this room full of alternative asset managers, which really isn't alternative anymore, this room would have had, a couple hundred people in it, and now it has several thousand, and that's the world we're living in right now.
Yeah, this is the guy who created, junk, high yield, when it was considered creative, alternative in its own day, and it's such a part of normal financing today, right? It's interesting to see that trajectory. The same thing with when you talk about things like private credit.
Absolutely. I think.
Oh, are we done?
I think we're done, Carol. Do I have to give you cues here, even when we're in person?
I
mean, it says so right there in the teleprompter.
Can I just say, the energy here is so high.
It's very loud. It's very hard to hear. I didn't hear half of what you said, but it sounded good. I just nodded my head. Yeah. Anyway, we got a lot more coverage coming up on Bloomberg Television and radio. A lot of great interviews. Mike Arrighetti and a few other folks. Mark Lipschultz. Really going to get a real good lay of the land over the next hour. Right. And it's private equity. It's private credit. It's venture capital. That has really slowed down. But you're hearing about AI a lot. You're also hearing about clean technology. All right. Well, that wraps it up, Carol Massar. I'll read your lines here. Our cross-platform coverage of the market close on Bloomberg Television and radio. Stick with us. A lot more coverage coming up.